All right, Jeremy Wienia, Black Belt Broker Team, and your foodie realtor, but we're doing a Real Talk Thursday. And yesterday, it was the 15th of June, and we had big news that the Fed raised rates 3/4 of a point. Biggest bump they've done since, I think, 1994. Everybody freaks out, but actually that made the bond market and mortgage-backed securities calm down a little bit. Inflation is high. Inflation has to be brought down. The way to do that is increase the rate for lending for the Fed, and that's going to hopefully bring inflation down. Honestly, if the Fed really wanted to do something, they probably should have raised it more, but that's just too scary for people to handle, and so they haven't done so. They're probably going to do a 1/2 to a 3/4 again later. Right? Not news to anybody that's paying attention, but what do you as the average home buyer, home seller need to know? Well, rates are going to probably continue to climb. By the end of the year, there are a lot of folks predicting 7.5, maybe even 8% interest on a mortgage. I'm going to do tons of videos about this probably over the next year. We still think you're probably going to be okay. I mean, predicting the future is hard, don't get me wrong. It's tough, but if I was good at it, I'd have a lot more money. I'm just okay at it. So what does it mean for you? Probably still get in and buy, because we think rates are going to continue to climb. That, as long as they're going to be there a few years, that rate savings is going to offset any projected price decrease. We do think prices will probably come down over the next couple of years, but I think depending on your market, that might not be all that much come down. I think Colorado Springs is going to stay pretty strong. We're a desirable market. We're less expensive than a lot of other cool cities. Things we've talked about before. So I think our market's going to stay pretty strong. Do I think prices could come down? Yes. Do I think they'll stay down for a long time? I don't think so. I think they're going to come back up slowly after they do a drop. I think that drop's going to be not terribly huge, 15-20%, which maybe sounds huge, but when we're seeing 20% year over year for the last quite a while, that's not all that much. It means if you've owned your house longer than a year, you're probably going to come out just fine. If you just bought your house, it means you got to hang on to it a little while. But if that rate savings is there, it's going to be totally worth it, right? Rate savings over long term is going to be substantially more money in your pocket than decrease in price, but higher interest rate long term. If you're only going to own it the short term, well, then we better talk and do some real serious plotting and planning. If you have questions or concerns or things you'd like to run by me, I'd be more than happy to give you my thoughts. If you have specific needs for the real estate market, let's have a powwow. Let's figure out what's best for you. That might be renting. That might be buying. It all depends. If you're moving out of state and into other markets, we can do some research on that too. Although I'm definitely more of an expert on Colorado and western states more than the east. If you like what you see, hit that subscribe button, hit that like button, hit the notifications, share this. We'll catch you on the next one.